getting locked out and having to reset passwords. So let's look on the 15 minute. 15 minute is going to tell us where we're moving for the day. I mean, from here, right here, we had a late DC. I mean, this is at 10 a.m., like 10:30 is where it was. So the DC was late, which means we had a late distribution. You can see distribution was on the daily cycle, meaning we have XAMD. So XA manipulation was at open, and you either got shorts at open or you got really nothing else great because we had a news candle. So shorts at open was the trade. I can log in actually and see. You can put on my executions. I'll put up a photo because I'm not logged in right now. But this 90-minute cycle at open is why I took this long right here. This was a bad position to take because it was the like very open of AM, and so it was automatically just like, and the RR was terrible on this one too. Actually, my stop loss is there, but it was just literally basically a pattern trade in the sense because this was a manipulation candle. Like opening, we took out, or the opening 2 minutes, we took out the high, creating our 90-minute, which then sent us over right here. First presented was our displacement candle, so we displaced lower. First presented was created. This 15-minute is what I thought shorts was going to take off from, so I took another short before 10 a.m. news, that like big news candle, which I got stopped out short. I shorted here with this order block being my stop loss, and I got stopped out. So that was the last short. I took like 3 micro shorts here, so it was just stupid losing money, small money, having small stop losses, not having like real trades on the table. So don't ever do that. And I lost $850 doing that shit today. So it just goes to you always pay the price. So I took a long here, loss of like that was a 350 loss, so that was like a 1 hour loss for the new fundeds, and then I took a long right here. And I should have waited for the resweep. If I waited for this resweep, I could have at least gotten profit on this inversion for value gap. Like literally, I could have had that stop right there and then gotten in and gotten something. So unfortunate day, but I'm just gonna let it pass and have these candles print up more data so I can use it to trade. Because this is our drawn liquidity at the moment, which is discounted the range, which isn't really a great discount. If we go to the hourly, which I always love to use for the week, the hourly is what we want to be using, but before the hourly comes the 15, so that's what I was using. I'll just put it here at buy side. And we'll look at the OTE because this sweep right here, we actually have a large gap, but this sweep was literally all we had to bring us higher. I knew we were coming lower. I actually mentioned that we'd come lower in July, but actually we're accumulating more than moving lower. We're just moving lower internally to accumulate. So kind of doing some BS. My target is going to be this gap right here. And I want to tell you, where are your targets going to be? For the fair value gaps, especially the 1 hour, the 15-minute, and the 5 minute, your highest fair value gap that did not get tapped into, I don't care if it's an SMTF, if it did not get tapped into it on one asset, that is your target first and foremost before hitting liquidity. And we have Asia sell side from previous week right there, which aligns perfectly with discount. Our discount is actually going to be right here. And so when you mark out the ranges, right, our weekly cycle, yeah, I got broken right here. But this also is in play right at this high because this high did not get hit. So this weekly cycle is actually in play. I actually noticed that and I thought it wouldn't be. So what does that mean? That means we're trading within this range of price action. And I can mark out our daily for value app on NQ. It would actually be helpful to do so right here, which is what we're bleeding through right now. So let's actually go to the 5 minute. So what I mentioned, the range we're trading in, actually the 1 hour is the best. So the range we're trading in, OTE, this is our discount. If 0.705 is aligning perfectly with Asia sell side actually here for our previous week, or previous day. But discount would be, I would count this. This would be our discount. Usually we're looking for an internal sweep, but I'm liking how this sell side is being generated right here at these lows. So that would be our discount sell side. That's what I'm looking for as a target on ES. And then obviously these two lows, which brings me to this 1 hour gap, which let's look on the 90-minute where our liquidity is resting. And you see we have these swings right here and also this sweep on the 90-minute candle, but really on the 15-minute it's just moving up higher. But that's what I like to look at for lows and internal targets. but this gap is really what I'm aiming for it to come down to. So I'm just gonna wait and watch for the rest of the day. That's kind of just how we're viewing price action at the moment. I took unfortunate losses, so what that means, I'm gonna show you how to risk manage this because I'm gonna come back and I'm gonna show you guys how this can be saved because losing $800, losing like half your account if it's a 50K on a day, yeah, that's bad, but okay, let's risk manage accordingly. Let's risk to three contracts, $250 to $300 loss, so we have three trades to take. If we have an average one to two, even one to two, one to three, we can easily get into $500 profit. Which then, if we're like trading for profit to come back from a loss, which we need to do if we're in drawdown, especially on a limited funded account, then you do that, right? If you are in OTE and it's retracing and you're already up 2R, then you're gonna take 1R. Like no matter what, you're gonna take 1R. You're just gonna make little steps. So that's kind of we're going to be trading a bit discretionary, and that's just kind of how we have to manage ourselves at the moment. And because of executions, that's kind of, which I'm actually going to just we'll pull up right now. So yeah, these are the executions done before literally the distribution cycle, and I just kind of cut myself off early right there. I should have waited for 9:45, 9:45. I could have gone in long and then got enough to get stops break even. And after that, I probably would have been off waiting for 10:30. I mean, what other thing do we have other than regular trading hours giving us this beautiful sweep reversal off this not a great CISD to use, but if we go to the 30-second, yeah, there's really nothing else to use except for just this inversion that held and held and held until we inversed 10:30 and first presented, which you could have gotten in to choose the direction for the higher time frame. If we look at the 2 and 3 minute, which I always tell you to use for gaps in structure, if it could have been traded better on one or the other. So after this, we had an internal CISD on the 3 minute. We have these array of three candles, and coming into distribution, if you were patient, if you were very, very patient, then you could have got this entry with a short, like, stop loss above 10:30, which I said. Targeting data low. That is the only really trade you could have gotten after that. I mean, 11:40, 11:30. I should have been patient for something like this. Like, why am I getting off the charts early? Let's be honest with ourselves, guys. If you're going to wait for your model to play out, be patient enough to wait for all of the scenarios to play out. Off of that, let's see if we got any cracking correlations. Just that all-time high sweep is beautiful. Really, stuff like that, I don't collect enough data for. I'm going to be honest, I don't collect enough data. I know what all-time, like, the concept, it makes sense to me. The PO3 is aligning, but if the SMT doesn't correlate, and yeah, of course, manipulation to distribution high is what we're looking for. Yeah, so manipulation to distribution high in the 90-minute so it was a 90-minute sweep, which I do like. After that 3 minute is actually the 3 minute CISD internally off the inversion. That would have been your best trade to take. And the stop loss on that, even on the 3 minute, if we're using 3 minute gaps, I mean, we get into the range. But on the 1 minute, it doesn't look like that. But still, we are. So that still would have been between like a 40-point stop. That would have been your 40-point stop. RR is easily 1 to 3. Even to OT of the range. Supporting by 3 minute structure on the way down. It got a little sloppy, I'll be honest. OTE definitely does that. And it's going to be at point, like, literally 0.705 of the range again, or something around that. Like, 0.602. We get a little volatility, retracing, 5 minutes holding, 15-minute. Okay, just waiting for a 15-minute to close, right? That's just the basic premise of that. Because then we have that new 90-minute candle, right, at 12 p.m. That sends us in a direction. So let's look at the 90-minute candles, actually, right here. 90-minute candles, if we're like, because I'm analyzing this, and this is how I analyze it, but I just take stupid-ass trades sometimes, so just bear with me. This is how we should have traded it. We're waiting for this entire candle wick to be created. Let's look at the body right there, and then we're waiting for the second 90-minute candle to continue the movement of the first one. So when we have an XAMD day, distribution is going to be later in the day. So I think I'm just going to have to wait longer on the charts, because if we're setting up for the second true microcycle, our second Polonar tried QT. After that inversion, that is like guaranteed we're going to CE, right? We're going to OTE, and then lower if we're aligned, which we were aligned. So after that, that was our retrace, our little volatility spike, right? At that same time, because it's PO3. Then we are creating after our wick, we're creating the rest of our body to create our 90-minute candle distribution to the drawn liquidity. And this is all happening like within, like, if we're analyzing to where X is, I usually go to like a third of the way in on both sides. A third of the way in, that is where our distribution is going to be. And mainly that is where, okay, starting X was a bit clean. That's our 90-minute PO3. This is exactly what our 90-minute is going to be doing. And then by basically the middle of A. Middle of A is where we're done distributing. That would be like literally, I would probably even exit on true microcycle distributing. So after that inversion, you would still manage a RR like right there. After that inversion, if you're trailing stop loss just to like get out of a trade after sell side's been taken, then after the first inversion you want to be out, which would be like putting a limit right there. So you'd get out like at 170, 140, or sorry, 150 if you get like a really bad fill, because 150 is still like right there. We're pretty volatile. That's where the wick high is. So it's never out of the question. So that is it. I'm done. I got to get off for the day. So much problems with my computer today, and I'm just kind of tired of being on the charts and on the computer and on the desk, bro. I got to get off. And maybe I'll analyze, see what happened later, but I need to get to the gym, dude. I'm hungry. And I'll see you guys tomorrow. I will definitely be trading better. We have so much news, so I got to take a chance of the opportunity. I got to seize the moment to have good trade setups come, because I can trade them. I just got to get over the fact that I'm going to lose sometimes, and I'm, just got to accept that. Because I lose a little bit until I lose a lot, and I only lose a lot when I don't listen to the rules I set, because I know I'm going to lose. So, you're going to lose. Just lose less. It's the biggest thing. Easier said than done, but still, it's not too hard either way. I'll see you guys in the next video. Take care.